Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so the XJO is jumping strongly once again. We broke through the key 73.30 resistance level, and that's brought us back up to test an intraday high around the 7400. The market does like to test sort of those whole numbers on the way up, so I'm not surprised to see it take a bit of a breather here today. The nature of the market's been sort of a couple of strong days sideways back to trend, a couple of strong days sideways back to trend. So look, I wouldn't be too surprised to see sort of a weaker day tomorrow. But nonetheless, look, the trend's up. Long-term trend, short-term trend's up. Doesn't matter which way you spin this. Overall, medium to long term, you've got to be pretty bullish. Shorter term, look, obviously, you know, it's always harder to exactly pick. No one's got a crystal ball. But at this stage, look, short term is looking a bit overbought, but momentum's up. So by all means, we could easily see another 100 points or so in this market in the short term as well. Now, if we come across the S&P 500, it's a bit of a different story in the short term here, that rather than jumping high like we're seeing in our local market at the moment, the US markets are grinding higher ever so slightly. Now, that could change very quickly coming into the Fed meeting this week. But nonetheless, the momentum's a little bit different over there. They've gone into more of a grinding higher phase rather than a leaping higher phase. For them to jump higher, I believe they're going to need that next catalyst, whether it be coming from the Fed, whether it be coming for some more physical stimulus. I'm not sure yet, but I do think they're going to need another catalyst to get that big jump, that big movement that we've seen recently this year. Otherwise, yeah, a grind higher looks like it's on the table at the moment. So as I just mentioned, the Fed meeting is the big thing. So Wednesday night, we might even hear some noise throughout the morning Wednesday as well. But nonetheless, yeah, look, we're looking for the Fed for some guidance on when they're going to start tapering bonds. I believe that's the biggest question on a lot of investors' minds. The Fed may hint on what they're planning on doing here. Nonetheless, most Fed meetings that come out the other side with a lot of reinsurance for the markets that rates aren't going up anytime soon, and they're going to be, you know, they're willing to see a little bit of inflation in the system in the short term, and they do believe the inflation is just transitory. That's the message, and I believe they'll stay on message. The only difference here is they might start hinting on when and how they're going to start tapering their bonds. Look, it's going to happen in the next few months. At some point, they're going to lay out a plan on when and how slowly they'll start tapering. I think that's a given at some point, maybe next 2 to 3 months. So that's what I'm looking out for every month on month now from the Fed, is whether they're going to give us some guidance on when and how they're going to start tapering. So yeah, there's something to keep an eye out there. They haven't publicly said it yet, so that's what we're waiting for, is that public indication, and you know, I guess that's what the market's looking for as well. Inflation, look, we saw some of the inflation numbers come in a little bit higher than expected last week. The market doesn't seem to care about that at this stage, as most people believe it's transitory. When you look month on month, inflation actually fell. When we start comparing the last year on year, yes, it was higher than expected. Look, this space will be uncertain for the next 2, 3, 4 months, obviously, so sit tight, take it month by month. At this stage, we know that the Fed and the central banks of the world are willing to let inflation run for a little bit. They indicated that a number of times over the last 6 to 12 months. We came out of a massive deflationary issue, right? So even before COVID, we had a massive deflationary issue. So we've got a bit of catch up to do from an inflation standpoint. There's problems that are going to come from that, and they're problems we're going to have to deal with in the near future. And when I say problems, I mean problems from, you know, an individual's point of view, cost of living point of view. But from a stock market point of view, this is extremely bullish at the moment, right? So the inflation should lead many equities to go higher, and that's why we're still very, very bullish the market in the short term. And that's why markets remain at highs. Look, our markets run off a bit more because we've got a bit more catch up to do. You know, the US market has completely outperformed us in the last 6 months. So there's no surprise that the Australian market's playing a bit of catch up now. We've had a lot go our way. You know, we've got stronger than expected GDP. Showed our economy grew faster than it did pre-COVID. We're getting the ratings agency re-rating us back to positive again. Okay, everything's on our side right now. Commodities are high, iron ore's above 200, the dollar's behaving itself. You can't get much better of an environment for equities at the moment, right? With all the stimulus that's being thrown around locally and offshore, it doesn't get much better than this from an environment point of view. Yes, it could be a bubble. Yes, at some point that bubble may burst, but that's a long way off. You're thinking too far forward if that's the way you're thinking. Okay, that's how I see it anyway. All right, so trends are likely to hold, likely to go up. Short-term things do whip around, so always timing is the key, guys, if you're going to get into this market. Things are running a bit hot in the short term right now. Who knows, there might be a little bit of a pullback to come. But seasonally and cyclically, you tend to get a push up from here to the US and Australian reporting seasons. Okay, between now and August, I believe the markets will be a bit more higher than what they are right now. Okay, I'll put to you that way. Okay, so US stimulus, obviously we're waiting for more physical stimulus. Biden's big infrastructure bill, that is obviously still being negotiated. When that gets passed through, that might be your next catalyst to push higher. If it's not already priced in by that point, it is taking a long time to push this through, right? So just be wary that a lot of it could be priced by the time that is even announced. But regardless, there's so much more to come for these markets in the medium to short term outside of this as well. And including one big thing that you should be keeping an eye on is companies coming out and doing share purchases. So if they start doing share buybacks, purchasing their own shares, that sort of thing as a strategy. They did that through most of the years after the GFC when they were doing QE, when there was a lot of QE around. A lot of the big US companies were buying back shares. That reduces their PE ratios. It makes them more cheaper per share to earnings point of view. That's a whole supply demand dynamic for the shares as well from a stock market point of view. All of that is things that I believe we're going to see on the horizon as well to help push markets higher and higher and higher. So the thing that's cooking in the background, simmering in the background constantly is China tensions with the US, with Australia, with the Western nations. We saw through the G7 meetings on the weekend was Morrison overseas looking for more support to help battle the trade tensions with China and other things with China. Obviously, there's a lot to talk about there, but I'm not going to go into too much detail. That could hold a lot of the miners back and a lot of the exporters from Australia to China back a little bit. The sentiment around this is a little bit unsure, right? So even though there's a lot going for the material sector right now with iron ore above 200, there's always that little bit of hesitancy from people when Morrison's overseas spruiking and talking to other Western nations about getting support to help push back on China. Who knows where that's all going to go. Obviously, I'm still a big bull in that space. One way or the other, iron ore is above 200. We're still exporting iron ore to China, and that's not going to stop in the short term. So I still think between now and August, things like BHP, Rio, Fortescue will kick up a lot more than what they are right now. Alright, but yeah, just got to keep an eye on this simmering tensions out there with the China and other Western nations. We're not sure where that's going to go in the near future. Obviously, when Trump was around and he was causing a lot of ruckus in this space, the markets would react at this point of time. Rather than getting a downward reaction, what we're actually seeing is more that there's just a little bit of hesitancy towards those types of stocks that are exposed to China. Okay, so there's not much else to really say here, guys. Look, the market's on a bull run. I'm not surprised. I've been calling this market higher for a while now. And at this point of time, the short-term move, it could easily go another 100 points. But I wouldn't be surprised to see a breather for a few days beforehand. Okay, the US markets have been going sideways for quite a period of time. So with the proper break higher, I think we'll have to wait for the Fed meeting for this. But after the Fed this week, we might see another blue sky run out of the S&P 500, depending on what type of tone the Fed come out with on the other side. All right, so that's it for this week, guys. Thanks for listening in. Take care and bye for now.